We are kicking off today's market breakdown with a story that cuts to the heart of one of the most contested debates on Wall Street right now: whether generative artificial intelligence is a structural wrecking ball for legacy digital platforms. BTIG just downgraded TripAdvisor, ticker TripAdvisor, citing direct exposure to artificial intelligence disruption across travel planning and booking. This is not a routine valuation call. It is an analyst firm saying the very business model that TripAdvisor has built over 2 decades, aggregating user reviews, driving organic search traffic, and monetizing that audience, may be fundamentally compromised by the artificial intelligence transition now underway. BTIG's downgrade lands against a backdrop of genuine macro stress for multiple sensitive digital names. The 10-year Treasury yield sits at 4.60% this morning, up substantially on the session, and that matters enormously for how investors price growth-dependent platforms like TripAdvisor. Higher discount rates compress forward multiples, and when you layer a structural artificial intelligence disruption narrative on top of rising rates, the valuation math turns hostile fast. The broader equity tape is mixed. The S&P 500 is off 0.16%. The Nasdaq 100 is up 0.10%, which tells you growth names are already absorbing rate pressure before the artificial intelligence thesis even enters the equation. The deeper issue here is what artificial intelligence-powered search and recommendation tools actually do to TripAdvisor's competitive position. TripAdvisor's entire monetization engine depends on users arriving via organic search, engaging with reviews, and converting into bookings or clicks that generate ad revenue. When a traveler can ask a generative artificial intelligence assistant for the best restaurant in Lisbon and receive a curated, conversational answer without ever visiting TripAdvisor, that organic traffic funnel collapses. The prior estimates embedded in TripAdvisor's sell-side models almost certainly assumed artificial intelligence resilience that BTIG now explicitly questions, meaning consensus earnings estimates may be too high. The contagion risk from this downgrade extends well beyond TripAdvisor. Expedia, ticker Expedia, and Booking Holdings, ticker BOKNG, operate similar ad-supported discovery and intermediation models that face the same artificial intelligence cannibalization dynamic. Airbnb, ticker Airbnb, has more direct supply-side differentiation but is still exposed to top-of-funnel traffic erosion if artificial intelligence search replaces traditional platform discovery. Even Google faces scrutiny here. If artificial intelligence tools route travelers around Google's own search pages, the meta-narrative around artificial intelligence cannibalizing legacy digital advertising revenue intensifies. The VIX at 17.75 suggests the market is not pricing systemic fear yet, but a TripAdvisor sell-off could spike travel sector volatility quickly. Watch the 10-year Treasury yield at 4.60% as the primary rate anchor. Any further move higher accelerates multiple compression for the entire online travel agency cohort, which trades on forward price-to-earnings multiples acutely sensitive to user growth and ad monetization per user. On the equity side, monitor small-cap proxies as indicators of whether the market is repricing growth risk broadly, not just in travel. The upcoming earnings cycle for Expedia, Airbnb, and BOKNG will be critical catalysts. Any confirmation of engagement decline, lower conversion rates, or guidance cuts will validate the artificial intelligence disruption thesis BTIG is articulating today. The BTIG downgrade of TripAdvisor is more than a single stock call. It is a signal that the sell side is beginning to formally price in generative artificial intelligence as a structural threat to user acquisition and monetization funnels at digital travel platforms. Until TripAdvisor, Expedia, Airbnb, or BOKNG can demonstrate artificial intelligence-resistant pricing power, durable engagement metrics, or genuine margin resilience in the face of shifting traffic dynamics, tactical exposure to the entire online travel agency sector deserves to be reduced. That is the one story driving digital travel sentiment today. The full breakdown is up, and we will be watching every catalyst that moves this thesis forward. If this kind of deep dive analysis is what you need to stay ahead of the market, hit subscribe and turn on the notification bell so you never miss a breakdown. We cover every story that moves your portfolio every single trading day.